So second point was it's too volatile to be used as a currency or an asset. So
absolutely. So I've told this to several people, right? That Bitcoin today is worth at today's price, say 0.7, 0.8 trillion, maybe in that range. Just to give you context, gold is about 10, 11, 12 trillion dollars. That's the range for gold market cap. And I think US equity is around 30 trillion or something, or maybe even 50, 60 trillion. I don't know. And bond market is 2x of US equity trillion, US equity market cap. So there is a lot of space, right? When compare Bitcoin like you would to a micro cap in a stock market, how volatile, right? 5 days upper circuit marega, फिर 3 days lower circuit मार देगा, फिर 5 days range bound चलेगा, फिर suddenly next month वापस 5 days upper circuit मारेगा. That is called volatility. If you remove upper circuits in the US, there is no concept of circuits. So those micro caps go up 20, 30, 40% on a weekly basis. And therefore, because the size of that asset or security, or you can say currency, is very small, it is subject to people dinging it, right? Because somebody who wants to, so imagine Reddit, right? When they did GameStop, it was a band of million people who said that, boss, I am not going to cut my position, you can do what you want to do. And he kept bribing them with higher prices because there was a short squeeze, so they kept getting the price up, but they couldn't get people enough stock to unwind their position. So the same thing can be done today for Bitcoin. The point is you have to allow it to mature. It is an evolutionary thing. You have to allow the evolution to occur and for it to mature. Today, when Elon Musk says it's not green, the market drops it. Tomorrow, China says I ban it, the market drops it, the hash rate dies. So those things will affect it. It's what is called as a single large event. A single large event will affect that particular currency because it's still too small. Currently, what's happening is the Fed indicated interest rate hikes from April onwards. So the thing got risk capital supposedly left it, right? Now imagine a $30 trillion US equity market losing $3 trillion, which is 10%, versus Bitcoin losing, if it was at say 1.2 trillion or 1.3 trillion when it was at its peak, or 1.5 trillion even, if it loses $300 million, $300 billion, then you're going to lose 20%. So it's going to have a 50% effect on its price.
Exactly.
So that is how the volatility is addressed. If you want to trade it, it's beautiful, right? You will love the volatility. Whatever is your trading thesis, I am not a trader, so I don't want to get into it. But whether you're charting, whether you're looking at price action, volume action, whether you're looking at news cycles, whatever it is, you can have your own thesis and you can trade it. It's beautiful for traders. For investors, if you zoom out and you go from daily to weekly to monthly to quarterly to annual, you'll realize the direction is clear. There is no volatility. And so that's, you choose where you are and you decide, and you can live with the volatility then.
Exactly. And there's one more thing that I wanted to add here. So I did some analysis wherein I was comparing the free float of Bitcoin on exchanges and percentage of it that is traded on an average in last 24 hours compared to the free float of, let's say, an HDFC bank and the 24 hours average trade. So for HDFC, it wasn't even 2 to 3 bips. Like it was nothing.
Correct.
Compared to Bitcoin, which was 25%, because exchanges mein Bitcoin hi nahi hai. So when 25% of the whole free float is being exchanging hands, you really can't expect daily. You really can't expect it to just go 5 to 10% upar.
Exactly. And if you look at a micro cap, if you take a micro cap, if you take a Alok Industries in India, or if you take a similar stock in the US, you will get the similar percentage. You'll get that 10, 15, 20% of that free float is traded on a daily basis, and hence it hits upper circuit, lower circuit all the time. When it's not upper circuit, lower circuit.
So maybe that's the reason I feel a lot of Indian investors that I talk to they are too accustomed to the concept of upper and lower circuits. They simply can't take in कि एक दिन में एक asset 10, 20, 30% भी हो सकता है. Whereas in US, it's a common, like it's very common since they don't have circuits. So maybe that's more of a psychological barrier that Indian investors go through.